Welcome back. In today's video, we're going to drill down into the 2023 New Value Report, Crypto Trends in Business and Beyond from Ripple. I heard from many of you in the comments section from the last video, and you responded that you wanted to hear this report. You wanted me to read it to you, so that's what I'm going to do. But here's the thing. If we get to 15 minutes and we're not substantially through this, then I am going to make it a couple of pieces. Some of you asked that I read it all in one video, but actually I'm going to make it about 15-minute increments. So we'll see how far we get. Here's our introduction page, our table of contents. We're going to talk about introduction, tokenize, manage, move, a note on compliance, and conclusion. All right, here we go. There is no question that 2022 was a monstrous year in the world of crypto and blockchain. As a collective industry, crypto experienced it all, the good, the bad, and the ugly. Boy, was that true. And as with any burgeoning technology, the only constant is change, with crypto being no exception. Key drivers of that change include shifting global economies and supply chains, the rise and fall of stablecoins like Terra, the collapse of exchanges like FTX, cryptocurrency hedge funds like Three Arrows Capital, and more recently, major banks like SVB and Credit Suisse. We would be remiss not to think these events would have a significant impact on the industry at large, or to not address them head-on in our research and in this report. Well, 2022 was one of the most difficult years in crypto's short history, and 2023 appears to be off to a similarly rocky start for the broader financial sector. That doesn't appear to have shaken global confidence in the underlying technology. In fact, our research shows quite the opposite, with positive sentiment toward crypto and blockchain having actually increased over the past 6 months. More on that later. So, in looking at crypto through a broader lens, we see that the change is also being driven by growing consumer demand and interest in blockchain and digital asset technology, maturing use cases for financial institutions and businesses, and a broader shift toward real-world utility. And despite all the recent market turbulence, global finance leaders are still very optimistic. As the market recovers and continues to mature and evolve, so too will the applications of crypto and blockchain technology. This report focuses on the extent to which global finance leaders are aware of, interested in, and exploring crypto as a utility tool, and how it's driving real business value for financial institutions, enterprises, and their customers across decentralized finance, DeFi, tokenization and non-fungible tokens, NFTs, central bank digital currencies, CBDCs, payments, custody, and compliance. We also go a level deeper to explore not only the real value they're providing right now, but more and more how and why these technologies are beginning to merge together to provide holistic, interoperable solutions that will have deep, long-term impact. The global finance landscape continues to shift and evolve, ultimately heading towards a world where value moves as seamlessly as information does today, what we call the Internet of Value. As the past year has shown us, it's now more important than ever for global enterprises and financial institutions to be able to identify, define, and demystify primary topics, trends, and technologies to help pave the way forward for partners, customers, and the industry at large. As such, this report provides not only an overview of those concepts which are top of mind for leaders at financial institutions and enterprises worldwide, but also what primary problems and pain points those technologies can solve across key use cases. This is by no means meant to be an exhaustive list, but rather a guiding light for companies and financial institutions looking to understand the everyday business value that crypto can provide. Because, as it turns out, the real building with crypto is still happening. In fact, it's only just beginning. In keeping with the theme of our inaugural 2022 New Value Report, this year's version is also divided into sections as they relate to the Internet of Value, tokenize, manage, and move. And here we have a chart, and it shows a summary of key findings. Global finance leaders are confident in crypto, digital assets, and blockchain. It says over the past 6 months, finance leaders' confidence in the crypto industry has increased 72%, remained the same 17%, or decreased 10%. 79% of all respondents are either very or extremely confident when it comes to integrating cryptocurrency solutions for their business. And they have it broken down by regions. And then over the past 12 months, finance leaders' confidence in using cryptocurrency solutions for their business has significantly increased. That's 26%, somewhat increased 39%, remained the same 21%, somewhat decreased 9%, significantly decreased 5%. Crypto elicits overwhelmingly positive feelings for global financial professionals. 48% are excited and confident about it. 29% are optimistic, 11% are curious, 7% are uncertain or skeptical, and 3% are pessimistic, scornful, or fearful. Okay, and anticipate big impacts from the technology. Over 90% of global finance leaders think blockchain and digital assets will have a significant or massive impact on business, finance, and society within the next 3 years. Industries and segments where finance leaders see cryptocurrency having the biggest impact in the next 3 years are 37% say digital banking and fintech, 32% say PSP or third-party aggregator, 31% say technology, 28% retail banking and commercial banking, and 27% say money transmitter or payment provider. Summary of findings, big picture. Overall, Latin America is more bullish on enterprise and institutional use of crypto for business, followed by the Middle East and North Africa, MENA, then North America, Asia Pacific, and Europe, Middle East, and Africa. The vast majority of global finance decision makers, upwards of 88%, believe that crypto and blockchain will have either a significant or massive impact on business, finance, and society over the next 3 years. Over half of global respondents cite already having a cryptocurrency solution in place at their company, or are in the process of implementing one. Upwards of 3/4 indicate an openness to using or exploring other crypto technologies over the next few years, e.g. CBDCs, stablecoins, NFTs, etc. Not only does our research show that the vast majority of global finance leaders have confidence in crypto, but those who have the most experience or expertise with the technology are even more optimistic after using or implementing a crypto solution. While each technology offers its own unique benefits, some core themes are woven throughout. Benefits that emerge across many of these technologies include enhanced data security and privacy, improved automation and speed, financial flexibility and availability, and the ability to tap into new revenue streams or market opportunities. Despite the general positivity, uncertainty and barriers to adoption like privacy concerns, lack of clear regulation, risk management, and price volatility are still present. Tokenized assets. Most decision makers in this space are anticipating tokenized assets like CBDCs, stablecoins, NFTs, etc., to have meaningful impacts across business, finance, society, and specific use cases or industries. Compared to last year, respondents expect greater impact from CBDCs and stablecoins in less time. Cross-border payments and consumer-to-business payments are the top 2 most highly ranked use cases for both CBDCs and stablecoins. Enterprises are particularly bullish on the use of NFTs for business in the metaverse and events/ticketing. Over 80% of global finance leaders are somewhat or very likely to use cryptocurrencies, CBDCs, and or stablecoins in their businesses in the next 3 years. Finance leaders are more confident in cryptocurrencies to meet their business needs than they are traditional currency. Wow, let me read that sentence again. That's kind of mind-boggling. Finance leaders are more confident in cryptocurrencies to meet their business needs than they are traditional currency. Wow. Wow, wow, wow. Okay, very good. Portfolios, payments, and capital. Ease of use is far and away the most important requirement for organizations to enable customers to pay with crypto. Faster payments/settlement times and cost savings are the biggest value propositions for incorporating crypto into cross-border payments for enterprises and payments/treasury professionals at financial institutions, regardless of region and level of familiarity with crypto. Top reasons to hold a cryptocurrency are for use as a currency for making payments and for use as a hedge against inflation. Interest rates and other cost-related concerns are key blockers for borrowing, raising capital, and making cross-border payments. Perspectives and sentiment. Even in light of recent events and press about the crypto landscape, there are many clear indicators to signal that favorability toward and confidence in the industry has not been shaken in the long run. This suggests that any uncertainty was influenced by a few bad actors as opposed to the underlying technologies themselves. 2/3 of respondents say their confidence in cryptocurrency solutions for business has increased over the past 12 months. Nearly 3/4 say their confidence in the broader crypto industry has increased over the past 6 months. Crypto elicits an overwhelmingly positive emotional response, with 77% of finance decision makers feeling either excited, optimistic, or confident. All right, I just want to pause there because that is pretty incredible, and it's opposite what the media is telling us. So 2/3 of respondents say their confidence in crypto has increased over the last year. This is in spite of the FTX debacle and numerous other things that were bad and really featured by the media and really hyped by the media. Nearly 3/4 say their confidence in the broader crypto industry has increased in the past 6 months, and crypto is overwhelmingly positive with an emotional response. 77% say. That's astounding. All of those are great numbers and great to know, but something we probably would never hear the media say. All right, on to sustainability. Sustainability is top of mind for global finance leaders, particularly in the context of cryptocurrency usage for those at financial institutions. But it's not a key consideration for companies when selecting a crypto technology. Okay, so sustainability is not the reason they're using crypto. That makes sense to me. The next part is tokenize. Tokens or digital assets are digital representations of value on the blockchain. In essence, anything can be tokenized, including but not limited to currencies such as CBDCs and stablecoins, real-world assets, whether liquid or illiquid, like carbon credits, stocks, real estate and gold, art and collectibles, intellectual property and access rights, e.g. tickets, and more. Key benefits of tokenization on a blockchain include fast, efficient transactions in 24/7, 365 markets, transparent transaction data and decentralized security, streamlined capital flows and improved settlement times, new borrowing/landing markets via DeFi, increased customer engagement, brand loyalty, and financial inclusion through fractionalized ownership, improved liquidity and the ability to create multi-tier pricing structures, on-chain compliance processes linked to a digital wallet and/or digital identity. As more and more assets are tokenized and additional use cases for tokenization continue to be explored, tested, and developed beyond the simple JPEG, we are bullish on their future and broader business impact. We're not alone in this sentiment. In fact, Boston Consulting Group estimates the tokenization of global illiquid assets to be a $16 trillion business opportunity by 2030. Bloomberg estimates there's roughly $4 trillion locked in private equity and real estate. Real-world assets like stocks, bonds, real estate, and others can be tokenized on blockchains and improved efficiencies over traditional market infrastructure. Tokenizing previously illiquid asset classes like these opens up not only a whole new world of global investment and trading using DeFi protocols, but also solves problems related to slow settlement times, high fees, manual processes and dividends, lack of transparency and liquidity, cumbersome intermediaries, fragmented and lengthy processes. Yeah, I just want to pause and say, to me, these numbers seem extremely conservative. I'm not sure why reports are always so conservative. I'm not sure, but to say that tokenization of global illiquid assets is 16 trillion, I think it's much bigger than that by 2030. And Bloomberg estimating 4 trillion in private equity and real estate. Oh, much more than that. These really seem low to me. But, for some reason, they don't like to put, I think, very realistic numbers in their estimates. Maybe they always want to exceed their estimates, and so they're being conservative. Or maybe they just don't want us to really know the full extent of what they really think, which I kind of wonder if that's the case. All right, onward. With real-world assets represented on-chain, atomic settlement, i.e. instant access exchange, means faster settlement with less risk for assets like government bonds and quicker asset turnover for improved operational efficiency and increased revenue. These are just a couple of the many tokenization examples that are laying the foundational building blocks of institutional DeFi, covered in the next section, and spurring excitement among global institutions. Bringing financial markets and assets on-chain is quickly moving from hype to reality. According to a survey of global institutional clients commissioned by BNY Mellon and conducted by Celent, 97% agree that tokenization will revolutionize asset management and be good for the industry. They also found that 88% of investors are comfortable utilizing a digital representation of currency like stablecoins or tokens. Data from our research further supports this notion. When asked about levels of confidence in tokenized assets, CBDCs, stablecoins, and cryptocurrencies, compared to traditional currency, also known as fiat, to meet their business needs, interestingly enough, respondents selected either very or extremely confident, almost evenly across the board. So, in spite of the year that crypto had in 2022, confidence in the technology has not seemed to wane too much, especially considering traditional currency actually ranked lower than cryptocurrencies. That's amazing, especially considering traditional currency, i.e. fiat money, actually ranked lower than cryptocurrencies. Wow. That's where we're going. We're going to where cryptocurrencies are going to be trusted more than fiat. They're going to be trusted more than sending wires. Blockchain is going to be the most trusted method for sure. And, having an accurate record, etc., reducing errors. It goes on to say the majority, 72% of finance decision makers, expect to explore tokenization as a way to drive innovation over the next 3 years, especially those at financial institutions who currently have or are in the process of implementing a cryptocurrency solution at their organization. And it says $16 trillion in business opportunity by 2030 for tokenized assets. Again, that seems pretty low to me. Tokenization will drive greater global innovation. Finance decision makers expect to explore tokenization as a way to drive innovation over the next 3 years. Assets that would benefit the most from tokenization, 63% say online security data protection tools, and 50% say stocks would benefit most from tokenization. NFTs are anticipated to have meaningful impacts across a variety of use cases. For financial institutions, public stock trading, 82%, and private share trading, 82%. And NFTs for enterprises, metaverse, 67%, and access to events and experiences 51%, and afford many benefits for enterprises and financial institutions alike. Top benefits of tokenization include access to 24/7, 365 markets, greater financial agility and flexibility, enhanced security and privacy, improved efficiency and automation. Top benefits of CBDCs and stablecoins include better data management, security, and stability/longevity. Expected usage is high in the near future. 80+% of global financial leaders are likely to begin using cryptocurrencies, CBDCs, and or stablecoins in their business in the next 3 years. Confidence is highest in cryptocurrencies to meet business needs compared to traditional currencies, CBDCs, and stablecoins. And then it goes on to say, not only does our research show that the vast majority of global finance leaders have confidence in the industry, but those who have the most experience or expertise with the technology are even more optimistic after using or implementing a cryptocurrency solution. Finance leaders at enterprises in particular see this innovation happening across a number of industries, primarily those within financial services. This year, we're focusing on 2 main areas within tokenization that we foresee as having the most real-world impact across businesses, financial institutions, and their customers. That's NFTs for business and CBDCs. And then we have a chart. Enterprise finance leaders see cryptocurrency having the biggest impact on finance and technology, 37% for digital banking and fintech, 32% for PSP or aggravator, 31% for technology, 28% for retail banking and commercial banking, 27% for money transmitter or payment provider, 22% investment banking and brokerage, 12% insurance, 11% retail and CPG, 11% manufacturing, 11% oil and gas, 11% telecommunications, 9% consumer electronics, 9% media and entertainment, 9% travel and hospitality, 7% healthcare and life sciences, 7% transportation, 6% utilities, and 6% public sector. All right. Let's see if this is a place we could stop here. Yeah, I think this is a good place to stop. We're still in the tokenization area, but this has gone on for a while here. We're only on page 12. We're only on page 12. We didn't even make it through a dozen pages, but this is getting a little bit long and I want to keep it on the shorter side. So I will continue on in the next video and we'll drill down into the next part of this article. But bottom line, what I'm getting from this is the potential is enormous. They're conservatively quoting the numbers. They're looking at predominantly the next 3 years for major transition and adoption. And they're seeing it for all types of businesses, and enterprise CEOs and leaders are very confident and comfortable with cryptocurrency in spite of FTX, Three Arrows Capital, some of the debacles that we've had last year. They're still extremely comfortable with cryptocurrency, CBDCs, NFTs, etc. So this technology is getting adopted. It is getting put in place. The CEOs are comfortable with it, and I think it's all systems go for the future. So this is all good news in this report. We'll continue this report tomorrow. Thank you for tuning in and listening. If you liked this video, please hit like and share and subscribe to my channel. And if you have any comments, I'd love to hear what you have to say, what you think about it in the comment section below. So make sure and write your comments. I read them all. And thank you so much for listening. That's all for today. Until next time, live the good life and be wealthy and smart.